The CFTC and Caroline fam is clearing the way for assets like XRP to be used in our traditional financial system for derivatives. Why is this so important? Well, this is the reason people believe XRP could be 4 or even 5 digits sometime soon. The amount of money handled in the derivatives market is quadrillions of dollars, and it gets pretty silly pretty quickly. So I wanted to explore what is all going on, why are derivatives important, what are even derivatives, and all of the connections on the XRP ledger. Let's just get into all this information. It's going to be jam-packed, and hopefully by the time you end up watching this, you will fully understand why I'm so bullish on derivatives. The CFTC's actions marks a pivotal moment for integrating digital assets into regulated derivatives markets. This step will unlock greater capital efficiency and solidify US leadership in financial innovation. A derivative is simply a contract whose value comes from or derives from something else, like a stock, bond, interest rate, currency, commodity, or even a crypto asset like XRP. The contract is about how two parties will exchange cash flows in the future based on what happens to the underlying price index or rate. In plain English, a derivative is a financial agreement between two or more parties that specifies how money will change hands depending on an underlying asset or benchmark that moves in the future. Like we said, the underlying asset could be a stock, bond, commodity, interest rate, FX, indices, or cryptocurrencies. You usually do not need to own the underlying asset itself. You are trading on the risk and price movement linked to the asset. Why derivatives exist? Basically, risk management, hedging. A business or investor uses derivatives to protect against moves in prices, rates, or currencies that could hurt them. Speculation and leverage. Traders use derivatives to bet on the price moves with far less capital than buying an asset outright, which amplifies both potential gains or losses and, of course, arbitrage. Max Avery says this is a big deal. When you trade derivatives, futures, or swaps, you have to post collateral. This is called margin. Traditionally, that means cash or treasury securities. The CFTC just said, okay, you can post Bitcoin, Ether, or USDC instead. If you're an institutional trader with a bunch of Bitcoin on your balance sheet, you previously had to sell it or park it somewhere useless while you put up separate cash for your derivatives positions. Now you can use Bitcoin itself. That's capital efficiency in the most literal sense. The guidance also covers tokenized real-world assets like treasury securities or money market funds. This means if someone takes a treasury bond or represents it in a token on a blockchain, the CFTC is now saying that it can work as collateral too. This matters because tokenized assets can settle instantly 24/7. Traditional securities settlement is clunky, usually trade plus one or trade plus two process that only works during business hours. One of the structural problems with using crypto in traditional finance has been the mismatch between crypto, which never sleeps, and the traditional market, which closes on weekends and holidays. If your margin is in crypto, you can settle instantly and you can actually manage risk around the clock instead of sweating through the weekends, hoping nothing blows up before Monday. The CFTC withdrew Staff Advisory 20-34 from 2020, which put restrictions on accepting virtual currencies as customer collateral. This was basically a go slow guidance for more skeptical error than they're saying the Genius Act made it obsolete. For the first 3 months, the FCMs, the firms that actually handle customer funds in futures markets, are limited to Bitcoin, ETH, and USDC only. They have to report weekly on how much they're holding. They have to notify the CFTC immediately if anything goes wrong. This is the CFTC doing what regulators should do, allowing something new, but keeping close tabs on it. I consider the CFTC basically saying we want this business happening on US regulated platforms where we can see it and customers have protections, not on offshore platforms where people get wrecked and things go sideways. America is open for blockchain business. Now, Bitcoin, ETH, USDC, and I imagine other assets like XRP will be coming. XRP regulated derivatives, a drop becomes a tsunami. And then, of course, XRP eventually here might be looked at as a tier 1 asset. Institutional traders, ETF banks, regulated exchanges, regulated clearing, collateral layer, XRP, settlement layer, XRPL, RLUSD, and global flows, FX swaps, derivatives, cross-border settlement. XRP just entered US derivatives infrastructure for the first time, not speculation, regulatory fact. Binomial, DCM, XRP futures, binomial, DCO, XRP collateral, botanical, US perps, Brad on the board, a real shift in market structure. Ripple joins the ISDA in 2023. It was a strategic move. The ISDA sets the rules for swaps, derivatives, and collateral netting. Institutions cannot use an asset in real markets unless it fits the ISDA framework first. Derivatives are where global liquidity moves, not just the meme number, real activity, FX swaps, interest rate swaps, options, futures, collateral flows. This is the plumbing of global finance. Settlement must be fast, neutral, and reliable. That fits XRP. Under acting CFTC chair Caroline Pham, XRP futures approved, XRP futures accepted as margin, US perps authorized, digital clearing lanes expanded. Ripple is now positioned inside the US market infrastructure. And so here are all those connections that we just talked about. And then this resembles CME futures in 2017, but XRP has been more supporting of its rails. XRPL settlement, RLUSD stablecoin, regulated perps, collateral eligibility, governance access, and global corridors. XRP is not all the money. XRP is becoming the settlement lubricant for markets that move all the money. FX, derivatives collateral, tokenized treasuries, cross-border flows, liquidity corridors. And then also we did see here, this was news back in 2023. Just wanted to show you that, confirming that. And then of course, here is CME Group.
The derivatives market. The derivatives market is safer and more transparent than ever before. But the infrastructure that supports it is complex, disjointed, and costly to maintain. Managing basic processes throughout the life of a trade is manually intensive. Each firm has developed its own way of describing common events, like trade termination, compression, or the exercise of an option. This increases the potential for inconsistencies between firms. Constantly correcting this is a big drain on resources and is not sustainable. Fortunately, new technologies such as distributed ledger and smart contracts offer the potential for greater automation and efficiency, reducing complexity and costs. But effective automation can only be built on standardization. If each technology uses its own set of representations for trade events, then we'll simply recreate the existing disjointed infrastructure. To realize the full potential of these technologies, we need a common representation of trade events. That's where the ISDA common domain model comes in. ISDA's aim is to create a comprehensive standard digital blueprint for how derivatives are traded and managed right across the life cycle of a trade. The ISDA CDN will enhance consistency across firms and platforms, providing a bedrock of standards upon which new technologies can be applied. The derivatives market is on the cusp of a technology revolution. The ISDA CDN will help realize that potential.
So we understand that they have been moving towards blockchain for some time, and this is the next evolution of that. And then it says, you're not bullish enough. RLUSD approved as collateral in US derivatives market. Ripple's acquisition of Hidden Road plus CFTC greenlight, a direct bridge into Wall Street's deepest liquidity. And here is kind of a picture of how all of this would look. As you can see, Hidden Road, Ripple, RLUSD in the middle, and then the CFTC. All right, and then we talked about the ISDA, and this is kind of what it would look like. Derivatives are fertile territory for the application of smart contracts and distributed ledger technology. And then here is Jazzy Cooper from Ripple talking about how the XRP ledger is perfectly positioned for derivatives. It's towards the end, but I want to play the whole clip.
Trading and value transfer is definitely a sweet spot there. But when it comes to more complex operations or highly specific, financial protocols, that's not the sweet spot. And the XRP ledger community doesn't necessarily want it to be. So that's where we can really lean on our Axelar partnership, use general message passing, and actually allow applications to develop their tokenization engine on XRPL mainnet, their trading engine on XRPL mainnet, and then tap into advanced derivatives and other capabilities on the EVM sidechain. And those users never actually have to move their wallet or interact with the sidechain itself. So it's a very seamless experience. Really allows for the best of both worlds and is made possible by Axelar.
All right. And then, of course, Dark Horse has this receipts depository. Corporation launches XRP depository receipts. We covered this several months back. It says that this is where I leave the speculations to you guys. Just please don't start shouting 10K at me. The XRP DR is where derivatives market will be settled. If they use XRP And that won't be on chain. They will acquire holdings via OTC with Ripple and wrap into a security and be held only when the OTC isn't capable or doesn't exist anymore. Maybe the XRP DR deposit receipts will come to exchanges and will affect the price action soon. So this was just kind of talking about XRP depository receipts are securities issued by the RDC that represent direct ownership of the underlying XRP, which is held securely at Anchorage Digital National Association. Now, we also know that Robinhood recently made some moves to acquire Bitstamp. The reason, because Bitstamp has customers all over the world, especially in the EU, but also Bitstamp is a derivatives exchange.
If you think about a business or an institutional investor, they also want access to the things we offer. You know, they want 24-hour access to the equity markets, they want industry-leading margin rates, a great customer experience. So over time, I do think you'll see us branching more out into serving other types of customers, not just retail, but also businesses and institutions. And to that end, we announced an acquisition of Bitstamp, a global crypto exchange. One of the things that's very attractive about that business is that it's not just international, but also institutional. It gets us access to an entirely new customer base that we're not directly serving today. I think we can do more and more of that over the next 10 years.
We are launching our own derivatives exchange in the next few months, so that's something we are most excited about and really hope to cooperate closely with Ripple there as well. In final stage of integration of really some top 30 commercial banks globally on Bitstamp as a service, so these commercial banks will offer crypto through Bitstamp. So that's definitely something we are very proud of.
All right. And then also here you go. The reason why XRP is going to make history in the next era, Bitstamp, the derivatives market is the end game for value. And so here you go, Bitstamp, world's largest running cryptocurrency exchange, continuously supporting Bitcoin economy since 2011. Robinhood announced that it required Bitstamp in June 2024. And here is that information about Bitstamp and derivatives. Just wanted to confirm that with you. And the global derivatives market is 2.5 quadrillion. Even 5% of that liquidity routed through DLT would make XRP's current price look laughable. And Alphabet, Google will look like a small company. XRP does not need to absorb the whole market to have high prices. And of course, Coinbase also has their own derivatives platform. XRP futures are now live on Coinbase derivatives. But what are XRP futures? And it just goes into a little bit about that. I just wanted to show you that Coinbase is well positioned to take advantage. And then Focus Derivatives, XRP will add 5 trillion market cap overnight. And this is kind of just showing what the price would go to. And so we've seen this graph for years in the crypto space. But, even a little bit of the derivatives market on the XRP ledger could do a whole lot. You throw the ETFs in and the current supply demand, you throw regulation on and the new 50, 100 million people entering the crypto space over the next 1 to 2 years, all the 401ks and retirement plans that can now participate in Bitcoin and XRP and Ethereum. This is really where all of these markets and financial institutions are headed. You mix tokenization of financial products, G Treasury, Hidden Road, now Ripple Prime. All of this starts to add up to extreme value in the future. Once we get past the speculation part and we get to the utility part, this is what I am most excited about. And then here is close the day at $23.3 million. More XRP being bought. Here are the 6 products. And then, this is slowly but surely eating through some of the supply. One of the reasons CoinShares is doing so well is because Rex Osprey is buying the CoinShares XRP spot product at 41.36% XRPR. Even though CoinShares has not launched in the US, it is still indirectly purchasing through Rex. So it looks like they are preparing for what's to come. And then also here, CME did announce something just 7 days until spot quoted XRP and Sol futures launch. More things happening with the CME group, XRP, and Solana. Where does this all take us to the end of the year? I don't know, guys, but I even bought more XRP today. Let me know what you think about this. I hope this was a good education on why I think derivatives are so important. If you learned something, please let me know down below. If you liked the video, you can like it, you can share it, whatever you'd like to do. Just have a great week, and thank you for spending this time with me. I'll see you next one.